Students, after understanding various business and accountancy terminologies, let us jump into the next chapter, accounting. In this chapter, we will be understanding the meaning of accounting, the functions of accounting, the objectives, the limitations of accounting, as well as we also learn accounting concepts which are very important to understand the qualitative characteristics while preparing the financial statements. So this will be a very crucial chapter, though it may be a theoretical, but students must be very careful in learning these concepts and understanding these concepts. These concepts are very relevant until you finish your higher studies. So students, I request you to be very careful and learn these concepts very thoroughly. And if you have any doubts, always get back to us. So let us start the chapter. Accounting is an art of recording, classifying, summarizing, analyzing, interpreting, and communicating the financial information to the users of the financial statements. Students, every business must keep accounts in order to ascertain the financial results and the financial position of the business. And it is also very important to maintain accounts to ensure statutory compliances and providing qualitative information to the users of financial statements. American Institute of Certified Public Accountants, AICPA, it defines the accounting as an art of recording, classifying, and summarizing transactions and events which are in part at least of financial character in a significant manner and in terms of money and interpreting the results thereof. Students, it is very important to understand the accounting from the perspective of maintaining books of accounts. The very first step in accounting is that recording. It means all business transactions which are of financial in nature, which are expressed in terms of money, are recorded in the books of accounts. It is very important for a businessman to track all the business activities, be it investment, be it purchase of goods, be it sale of goods, be it incurring expenses. It must be properly recorded in a chronological order so that it will be helpful in understanding and completing the accounting process. The recording of transactions will be made in a prime book called journal, which is also further subdivided into subsidiary books. Here it is very important to note that only financial transactions must be recorded and non-financial transactions must not be recorded. After understanding the first step of recording, the second step is classifying. In this step, we classify the transactions of a similar nature at one place. For example, all cash transactions at one place, all purchase transactions at one place, all sales at one place. Grouping, it means grouping of transactions at one place such that information will be compressed and presented in a useful form. Here, in the step of classifying, we maintain a book called ledger. Each page in the ledger is called as folio, wherein individual account head and all transactions relating to that account head is recorded, which we call it as posting. Students, individual accounts must be maintained compulsorily. For example, if we are maintaining cash account, we should not maintain twice. Cash account should be maintained only one such account should be maintained because it helps in summarizing at the end of financial year. Ledger can be prepared only after the preparation of journal. It means once we maintain journal, from the journal we transfer the entries to the respective ledgers, which we call it as posting. The third step in accounting process is the summarizing. It involves the presentation and preparation of the information in useful manner so that the internal users and external users of the financial statement can understand it. In this step, we prepare trial balance and financial statements such as profit and loss account and balance sheet. In our further discussions, we will explain what is trial balance and what are financial statements. At this point of time, it is sufficient to know that in this step, we summarize all the ledger balances and we tabulate all the ledger balances so that we can prepare the financial statements such as profit and loss account and balance sheet. It is very important to know that after maintaining all the ledgers in the previous step, we summarize the ledger balances in this step. For example, cash balance, purchase balance, sales balance, salaries, depreciation, wages, capital account, all these ledger balances, individual account wise, we summarize into a tabular form called trial balance. And then we prepare financial statements such as profit and loss account and balance sheet in order to ascertain the financial results and the financial position of the business. Once we prepare balance sheet and profit and loss account and ascertain the financial results and financial position of the business, the next step is the analyzing. It involves the methodical classification and analysis of the financial items disclosed in the financial statements. It is pertinent to know that analysis is concerned with determining the relationship between the financial items present in the profit and loss account and balance sheet. It is very important to know where the business is going ahead, whether it is going towards profitable situation or whether it is going towards loss situation. This can be analyzed by comparing the financial data present in the financial statements. For example, net profit ratio. In the net profit ratio, the sales and net profits will be compared in order to find out the percentage of net profit earned on sales. If the net profit ratio is 20% on sales, and a businessman wants to achieve a net profit of 20 lakhs in a year, then he must have a sales of 100 lakhs during that year. So it gives us a valuable information as to where the business is going ahead. So that a corrective measures can be taken. So there are various types of analytical procedures are there which can be discussed at the relevant stage of accountancy. But at this point of time, the analyzing in this step is that it is the determining the relationship between the financial items in the profit and loss account and the balance sheet, which helps the businessman or any users of financial statement to interpret the financial data and make rational decisions by using the financial data. After analyzing the financial data, the very next step is that interpretation. In this step, it is concerned with the explaining the meaning and significance of the relationship as established in the earlier step. It means the recorded financial data will be analyzed and interpreted in the manner which helps the users to make a meaningful judgment about the financial condition and profitability of the business operation. For example, as an investor, if he interprets that business is growing, then he will invest in it. But to make a interpretation of that it is the business is growing, he must analyze the growth of the business and understand the financial position of the business, which will be done through analyzing the relationship of the financial data as discussed in the earlier step. Assuming the net profit ratio for the last year is 20% on sales, whereas if the net profit ratio is 10% in this year, then it means the profit has come down. It will be analyzed and interpreted as the business has incurred more expenses as compared to last year. So this leads to various interpretations which can be taken by the users of the financial statement in their prospective decision making. After analyzing and interpreting, the last step in accounting process is communicating. It is concerned with the transmission of summarized, analyzed, and interpreted information to the end users of the financial statements in order to enable them to make rational decisions. The decisions could be either to buy shares of the company or to lend money to the business or to supply goods on credit basis. The decision could be in any form. It should not be restricted only to the investment of shares. The communication refers here to the preparation and distribution of the profit and loss account and the balance sheet as well as the accounting reports in the form of ratios, graph, diagrams, and cash flow statements. Students will be knowing the communicating aspect at the later stage of the chartered accountancy course, which has been classically defined as financial reporting at the CA final stage. Let's sum up the entire accounting process. It starts with recording of all the business transactions which are of financial in nature that are recorded in a book called journal. It is important to note that only financial in nature must be recorded and non-financial transactions such as negotiating, shifting the premises should not be recorded. Once we record the transactions, the next step is classifying the transactions, which involves the grouping of transactions of a similar nature at one place such that the information will be compressed and presented in a useful form. Once we classify the journal entries into the ledger, which we call it as posting, the third step is that summarizing, which involves the preparation and presentation of classified information, that is ledger balances, into trial balance format. We prepare trial balance so that it facilitates in preparing and presenting the profit and loss account and balance sheet. And once we complete the preparing the financial statements, the fourth step is analyzing. It is concerned with the determining the relationship between the items in the profit and loss account and balance sheet. Once we complete with this step, the next step in the accounting process is interpreting, which is nothing but drawing the observations or conclusions from the items in the financial statements so that useful and rational decisions can be taken after interpreting the same. And last step in the accounting process is that communicating. It is concerned with the transmission of summarized, analyzed, and interpreted information to the end users of the financial statements so that they can make informed decisions.
So in our next session, we shall be discussing on the functions of accounting, objectives of accounting, and the limitations of accounting. Thank you.